Hey, Matt the Mortgage Guy here. In this video, I'm going to talk about, should I buy a house right now? And I get that question quite often as a mortgage broker, having conversations every day. So in this video, what I'm going to attempt to do is break down some pros, some cons of buying right now, who should be buying, who maybe should not be buying, and all the different factors. As we know, there's low inventory, there's a lot of competition for the few houses that are on the market, but then rates are low. So it's a great time to buy it in that respect. And really, there's a bunch of different things to consider. There's certain people that should probably wait. There's other people that probably should go ahead and buy. So I'm gonna go over not just my personal opinion, but just really some pros and cons about buying right now, and also who should be buying and who should not. So without further ado, let's get into it. Before we do, humongous favor, if you could please consider smashing the like button for the YouTube algorithm. It would be much appreciated. If you like straightforward mortgage, real estate, finance stuff, consider subscribing to the channel. Subscribe, ring that bell or whatever you do, and more videos pop up when I make them. So without further ado, should I buy? And it's a really common question. I totally understand where folks are coming from when they say, hey Matt, I'm just not sure. It seems like we've got a little bit of uncertainty, and businesses, what's going to happen if and when we get to reopen, what's going to happen with interest rates in the future, what's going to happen with the housing market, a bunch of uncertainty. And so what I'm going to attempt to do is just simply point out some pros, some cons, some of my ideas on what I think is a good reason to buy or a good reason to wait. And I'm going to try to do my best to be unbiased as a mortgage broker who's really passionate about real estate, helping people get into homes. I obviously am a big fan of real estate, and I see all the benefits of real estate. But with that being said, it's not always a great time to buy, and it's not always the perfect time for you to buy. There's some things that you want to consider, and there's some factors that go into it. So up here, over on the pros side, when I went through pros and cons of buying. Pros, low rates. Rates are at an all-time low, and I won't go into it on the sub 3% rate and where we're at today versus if rates were 4% or if rates were 5% and how much more you can buy with the same payment because rates are low. But folks know, in general, rates are at an all-time low. So you can buy more house. And not only that, something else to consider is that when you have a super low interest rate, every month when you make your mortgage payment, more of that money is going towards principal when you have a lower rate. When you've got a 5% interest rate or a 5.5% interest rate, you make those first 5 years of payments, and so little is going towards principal because the interest is higher and you're just paying more towards interest. So a second pro is that you've got a fixed mortgage payment versus increasing rent. Now in California, where I'm at, this is something that people are concerned about. Anybody who's lived in Sacramento or any other metro area that's seen humongous increases in rent can attest to the fact that you can have a $1,500 rent that goes to $1,650, that goes to $1,800, that goes to $1,950, that goes to $2,100, that goes to $2,300. 5 or 6 short years, your rent has almost doubled. Whereas if you buy a mortgage with a fixed rate mortgage, 95% of the mortgages that are being written today plus are probably going to be fixed rates, or they should be because fixed rates are so low. You've got a payment that's going to stay. It's going to be the same payment now, 5 years, 10 years, 15 years, 20 years from now. So you don't have to worry about rent increases when you're a homeowner. That's definitely a pro. And lastly, the dream. I wrote the dream because for some people it's just, hey, it's my dream to own a house. I want to walk in to my house, know that I own it. But on top of it just being the dream, appreciation, debt pay down, and tax incentives. In other videos, I've gone into more detail. I won't go into a ton of detail here, but what I will say is that sometimes real estate might go down 5 or 10%. Other years, it's going up 7, and the next year 8, and the next year 12, whatever it is. Over time, over any extended period of time, I can guarantee you, and I can only guarantee it because it's always happened, 30 years from now, the thing's gonna be worth more. So you can count on, you can be conservative, even 2 to 3% appreciation. The thing is going up in value, and then debt pay down. Every year, you're paying down the mortgage. So you pay down, you owe less, and it appreciates over time. So this is what it's worth, and this is what you owe. After 30 years, this $300,000 purchase is worth $650 and you owe zero. And then the tax incentives. I'm not a CPA, so I can't talk on that. But you're paying interest. You're writing it off on your taxes up to a dollar amount. I think it just changed to $750,000. Consult the CPA. I'm not a CPA, not a financial advisor, so I'm just saying that as a generality. Now let's get to some cons. And I'm gonna try to be good about providing true cons to buying, because we should talk about them. Competitive and limited inventory. Right now in 2020, it is extremely competitive in a ton of markets. Sacramento, California, the market that I live in, the market that I know best, I saw a stat that said something about a snapshot sometime early September, I believe. We had 2,200 homes on the market. Last year at that same time, we had 4,700 homes on the market. Less than half. Less than half of the available homes for sale on the market. And on top of that, we've got increased demand. We've got rates so low that people are like, I want to buy a house, get me in there. Sub 3%, 30-year fixed, I want to do this. And increased demand and less inventory is the reason why you see 10, 12, and 15 offers. To be completely honest, towards the end of September, I'm starting to see that slow down, and now houses are only getting 4 or 5 offers. So bless my buyers. They're in a little bit better position than they were just last month. Prices are high. Now this is something that really I've been hearing nonstop for the last 5 or 6 years. You know, prices are just really high. I'm waiting for them to get lower. What I will say about that is that in 2014, 15, 16, 17, 18, 19, I heard the same stuff. Prices are high. I don't think I'm going to buy now because prices are high. And what has happened to that person that didn't buy that house at $320,000 in 2016? That same house is now $415,000. So I have no crystal ball, and I'm not going to pretend to know with absolute certainty what home prices are going to do next year or the year after. Maybe they're flat, maybe they go down, maybe all of this demand and the limited inventory cause house prices to continue to go up further. I won't say that for sure because I don't know, and I just want to give good advice. That's my intention with this channel and with every client interaction I have. But don't let that be a deterrent to get you into a home, because no matter where prices are at, you've got a budget and you've got a certain amount you qualify for that works with your budget. It's something you can afford. Now, if what you can afford doesn't match what you can buy on the market, well, then maybe you don't buy. But there's likely something out there. You just can't have the fancy house. Not yet. Economic uncertainty. That's a con, and that's a real con. I think that people are uncertain. You know, we've got an election coming up. We've got coronavirus and the pandemic that's just caused a lot of uncertainty with businesses, with jobs, with all kinds of stuff. And so it's a real thing. And if people are uncertain to any extent, then maybe now's not the time to buy. What I'm going to get into now, who should be buying and who should not be buying, and I'm going to touch on that uncertainty because I think it's important. Bear with me, I don't like turning my back, but I'm just going to do a quick little who should be buying and who not. Is that even a word? And this is an easy one. It's just going to have 2 things. 2 things for who and 2 things for who not. This couldn't get any simpler as far as what I truly believe. Like I said, real estate in the long term is always a winner. Always. I mean, it's kind of like people that tell you about getting in the stock market. It's not timing the market, it's time in the market. Because once you get in, over time, it's going to go up. Down, up, down, up, down, up, down, over time. Long term, always a winner. Same thing with real estate, and I'll get into that. All right, so real quick, to not keep you, ability. All right, I'm a math guy, I'm not a speller, so forgive me. But who I think should be buying? Somebody who's in it for the long term. Hey Matt, this is the job I'm gonna work in for the next 17 years until I retire. This is the neighborhood that I love. All my friends are here, my family's here. This is a house that I'm gonna be in for the long term. In that case, the house in the neighborhood that's going to be a long-term deal, you can't get much better when it comes to mortgage terms. You find a house that you can afford, you buy. Job stability. And that one's important because when we touched on economic uncertainty, you've probably got two groups of people. And in California, we have a lot of state workers. If you're a state worker, your job is super secure. You know what you're getting paid this month, next month, and the month after. You know the job will be there next year, it'll be there the year after. So in that case, you've got a bunch of stability and security in your job. You find a mortgage payment that works. This is what I get paid every month. This is what I know my mortgage is going to be. It's not going to go up. You're always going to budget in if things go wrong, an emergency fund and all that stuff. But you've got job stability and you're buying something long term. I think you're a buyer. On the other side, who should not be buying? Short term. Well, my company relocated to Tennessee. I might be moving out there. My mom's in Idaho. We're kind of thinking about moving out there. If you're buying something for the next 1 or 2 years and then you're going to move, I'll tell you to rent. And I think that that's probably pretty common for anybody in this industry who's a real estate agent or a mortgage advisor. They're going to tell you it doesn't make sense to buy and sell real estate in the short term. Unless you're a flipper and you're buying something and remodeling and stuff like that, it's not a good thing to be in short term. Don't buy it if you don't know where you're going to be in the next 2 years, or if you are certain that you're going to be moving, just go ahead and rent. And then job instability. This is where you look at folks who work on any type of commission, or they're in an industry that they had to lay off half of their workforce because they're starting to do things different and they're changing the structure of the company. If you've got any reason to believe you might make less, your job might not be there at all, then maybe you wait. Maybe you wait until there's a little bit more certainty in your job. And that's it. I think that's my honest advice for who should and who should not be buying. Some pros and some cons to buying. I'm biased and I try to show both sides in videos, but really I truly believe in real estate. With the right mortgage terms, it's really hard to lose. If you were around and you think about 2008 and the big housing crash, the biggest reason that things came crumbling down was because it was a crash that was related to the real estate industry and the mortgage markets, and it came crumbling down and values came tumbling down while people were stuck in really crummy mortgages. They were in adjustable rate mortgages that had balloon payments, or they adjusted up 2% in any given quarter. And so that was where a bunch of the risk was. Right now, if you got yourself into a mortgage and you're working a state job and you say, this $2,300 a month mortgage payment compared to what me and my husband or me and my wife make is something that's going to be easily affordable every month, then whether that house is worth $360, $380, $325, you're not going to really worry about that. You've got stable income and you've got a fixed rate payment that's going to stay the same. Back in the day, a lot of people will agree with me here, you could get into a mortgage and it had some teaser rates, and in the beginning it was only $1,800, but then it had the ability to go up to 24 and then 27 and then 33. And it was always, no, don't worry, we can refinance, so don't worry about that. Well, your payment goes from $1,800 to $3,300 and your house goes down in value. That's a recipe for disaster, and that's what happened. That doesn't exist today. So it's a lot less risky, in my opinion. Even if you feel like you're buying something that's high and might come down in value, over time it's always going to appreciate in value. It always has and it always will. You're going to continue to pay down the mortgage. It's a fixed rate. It's a great interest rate where you're paying down that debt faster than you would at a higher interest rate. So any questions at all, please feel free to reach out. If this video brought you value, please consider sharing it, subscribe to the channel. And if you're in California, I'd love to help. Shoot me an email, matt@mattthemortgageguy.com. If you're outside of California, send an email as well. I answer questions for folks that are in other states that I can't do business with. And if they ask for it, I'll give you a referral to a great broker that's in your state. Thanks for watching. Appreciate it.